Good morning, everybody. My name is Deryck, the CEO of Portal Asset Management, and here with me today is Greg Galton, the CIO of Portal Asset Management. Hello and welcome, Greg. How are you?
I'm very well, thanks, Deryck. Morning to everyone.
Indeed. Firstly, apologies to our investors and listeners. We are nearly 8 days later than we would normally go to air. We were doing some research into one of our under funds or sub funds that we invested in. More on that later. But for now, we're going to talk about Radiance, about the marketplace for Bitcoin, about what happened in the month of November, which I think it's fair to say didn't meet anyone's predictions, being the month that everyone thought would be a solidly positive month. Greg, what happened in November and where did we ride through that?
Yeah, thanks, Deryck. So, as you alluded to, November was a very weak and particularly volatile month. Bitcoin ended up down 17.6%, although it was actually down during the month. When you look at the previous all-time high of 126,000 in the first week of October to around the third week of November, when Bitcoin dropped to 80,000, that was a 35% correction or drawdown.
Wow.
So that was a pretty significant drawdown. Bitcoin does tend to exhibit these large drawdowns in a bull market. It's at approximately 12 over the past 8 or so years, including the major bear markets, which are sort of typically quite long periods of downturn with a 70% pullback. When we've looked at Bitcoin within bull markets, 35% is quite large by any means, but it's not out of the realms of historically what Bitcoin has done. The reason behind that is obviously, as you know, October was a very difficult month. $19 billion in liquidations, the Binance infrastructure failure. That had a lot of flow-on effects, really, in terms of removal of liquidity from the ecosystem. And then you had some concerns about the Fed probably not looking to cut rates again and until the end of the year. And really all of that spooked the crypto markets and really saw a lot of fear coming into markets. In fact, we actually did register extreme fear on the fear and greed index, which doesn't happen very often, but it certainly does sort of down there with the sort of levels that we've seen historically that have tended to be good buying points for Bitcoin. And when you do tend to see that weakness. So the Bitcoin had a dip, and we like to buy the dips within the strategy. So the strategy moves in an environment in a risk-off environment where Bitcoin's weaker, the strategy shifts from a more of an income-generating strategy to more of a capital gain strategy. So the strategy will gear up. It will use collateral to buy extra perps, perpetual futures. But that does mean that we do tend to have what we call a higher convexity to the Bitcoin price. We do have more exposure on the downside, but also on the upside as well. So as I said, Bitcoin was down 17.6, but the fund was down 51.5. And now, a lot of people might be sort of very concerned about that. This is a natural function of us buying the dip. We are able to do this because we have very strong risk management processes in place and the protection provided by the put option. So we're very confident in buying the dip and knowing that the risk of liquidation is extremely low. So that's what the strategy does, and it does it in a very formulaic way. So we've had this pullback. Now in traditional finance, fund management, when you have a 50% drawdown, expectation there is, that it might take years to recover.
Yes.
We don't believe that's the case with Bitcoin. So those 12 drawdowns that I talked about with Bitcoin, the average time to recovery is 25 days, so very rapid. And the longest time period, this is outside of major bear markets, the longest time period to recovery is around about 3 months. So, Bitcoin, the volatility works both ways. So it has that downside vol, but it also has that upside vol as well. So we expect when the Bitcoin price is back at around about $115,000, i.e. about 11,000 is below its all-time high, we will be back at our previous peak in terms of NAV within the fund. That's a sort of, we have a very leveraged exposure to Bitcoin at the moment, and we do benefit from that recovery quite significantly.
Yes.
And our downside is very much protected and locked in by those put options.
Yes.
So we feel extremely confident and comfortable with the current position. It just means that there's no opportunities for us to write income at the moment because we are more focused on achieving that capital gain component within the strategy. So the strategy does shift from a structural income generating to a structural capital gain positioning strategy, depending on driven by the Bitcoin price. This latest pullback has us enacting that strategy. And look, as I said, whilst it might be a bit of a shock to people, it's something that we've seen historically with the strategy since running it since March 2023. So as I said, we are very comfortable with this, and we are expecting this recovery. And when we get back to all-time highs for Bitcoin, which I'm sure we will next year, just not sure when, we estimate that the fund will be up around about 110 to 130% from the transition or the pivot to the strategy on 1 January 2025. Over that same time period, Bitcoin will have been up around about 33% when it gets back to the 127,000, but the strategy will be up a minimum of 110% net.
Yes.
So that's really what gives us confidence in that recovery.
And that's the purpose of the fund. It's very interesting that if you're a buy and hold, or as the Bitcoin people will call themselves hodlers, they can drop from 126,000 down to 80 and back to 126,000, and they've made nothing if they've purchased at 126,000. But they've been very stressed all the way down and then hopeful all the way up. So if you're buy and holding, then these dips mean nothing but delays and reduced returns over a period of time, or an annualized return. But if you are a trader, then maybe these dips are exciting, but good luck to predict trading in the world of Bitcoin. And you never know whether a certain president might wake up one morning and send a tweet, and all of a sudden Bitcoin's price goes haywire, and it's very challenging to trade. But one thing we know is that Bitcoin's volatile, and as odd as it sounds, we actually like this volatility, and we like the dip, because when you invest in this, you're investing in the fact that we generate returns out of volatility, and we exaggerate the view of that volatility on a monthly basis to generate that returns. That doesn't mean we're simply vol times 2 or leverage times 2. Not at all. It's very much a systematic strategy, and it moves from generating income when the vol is essentially going sideways to, as you say, generating capital growth. When we see the vol drop, the systematic strategy buys in, and then sits and waits for a period of time. And that's the core part. And as it's recovery, Bitcoin recovers 33%, and now we're looking at recovering 110 to 130%. This is what generates our bigger returns these periods of time. So for the people that might have opened up the initial performance or fact sheet and potentially spat their Wheaties out or their coffee out across the table, what's important to note is that actually, no, this is exactly what we want, because that's what generates our income along the way and the growth paid to us in Bitcoin. Whether it's capital gain or it's income, it is paid in Bitcoin, which we view as the prime focus of how to continue compounding that. Any views of where we're going in the next year or the next 6 months? What are your thoughts there? I know it's impossible to predict the next 6 months, but next year is an interesting year, isn't it? With the elections coming up, etc.
With the midterms, yeah, for sure. I think we're sort of certainly in the camp of the 4-year cycle being extended. Probably not calling it the end of the 4-year cycle, but extended. Let's call it a super cycle. I think people have confused or conflated the time which happens to correlate to the Bitcoin halvings with that 4-year period. They've conflated that with the 4-year cycles, and really those 4-year cycles have been driven by the business cycle and the liquidity cycle, mainly the liquidity cycle. So Bitcoin has a very high correlation to that. So we're in a situation now where the Fed is still loosening rates. The US economy seems to be finally starting to slow. Some of the unemployment numbers are starting to deteriorate. Inflation's still holding up, but the economic fundamentals looking weak. And as you said, you've got the midterms upcoming, and obviously the Republicans will want to have a fairly healthy economy running into that when they try and get themselves re-elected. So I think all of that, and plus, you add on to that all the institutional investors that are coming into Bitcoin, I think that provides a very strong tailwind and sees that cycle extend into 2026 quite significantly. So we certainly don't think that we've seen the peak in this cycle yet, and we expect that to flow through into next year. And that'll flow through into other parts of the market as well eventually, in terms of how that might sort of impact Portal Digital Fund as well. And it's probably we're sort of segueing into Portal at the moment, actually, because as we've talked about most recently, we're looking to do a pivot into Portal. And the reason for that is a lot of the, you might call them traditional style hedge funds, have really just bought and held tokens. And what really has happened over the volatile periods that we've been investing in Bitcoin is really all they've done is ride the cycle. They haven't really added a significant amount of value in terms of alpha. It's just really been a very volatile beta play, which really hasn't sort of set investors up very well for that continued long-term investment. So, you've heard the phrase of carrying your bags for the round trip. Unfortunately, that's been the case. And that's actually what's happened to Portal Digital Fund this month. So there was a legacy position in one of our small cap funds where we'd been trying to exit from, to redeem from that strategy. We were unable to. The protocol or the token had been put into a side pocket while waiting for sell-side liquidity to improve. And despite this project's allegedly strong early momentum, both the trade volume and the price have continued to decline, resulting in a market-to-market valuation to near zero. So that's had a significant negative impact for Portal Digital Fund, which we estimate is down about 27.5% for the month. That's slightly worse than the CCI 30, which was down 19.4%. But look, that really gives us the further drive to continue to pivot the strategy. The sort of funds that we're looking for are really towards market agnostic, systematic strategies designed to generate returns in all market conditions. So non-directional kind of approaches, so market agnostic, and where they seek to capture the structural inefficiencies that are still unique to digital asset markets. A lot of those structural inefficiencies have gone from traditional markets, traditional equity markets, but you can still find them in crypto. That's things such as liquidity provision, futures versus spot price differences, volatility pricing, mean reversion, other microstructure dynamics that operate 24/7, far less competed away, as I said, than in traditional finance. So we are looking to pivot Portal Digital Fund towards those strategies and redeem from those traditional buy and hold hedge funds, which we believe, and time has proven actually, that really aren't suitable for as vehicles to invest into the cryptocurrency market. And that's no offense to the managers there. They do a very good job of picking tokens. But there's so much of the returns from those funds is driven by the market cycles rather than the token picking ability of the team. So that's really where our focus is heading into next year.
And Greg, it's fair to say that we have done considerable research in this area, and there are a number of exceptional performing funds that we've looked at and we've said these are very well suited to this non-directional market investment environment. And it's impressive. It's a matter of us now early in the year being able to deploy to a number of those funds and start generating those outsized returns so that we're no longer focused on, low vol, 25% return per annum, but really building wealth in the Portal Digital Fund as we are doing in the Radiance Fund itself. So, we'll be targeting, we've already targeted, we'll be deploying early in the first quarter for those funds, for the Portal Digital Fund, building its value, building its returns. And in the case of this, last month, this surprise downturn, which was the reason for our delayed podcast, really recovering some of that loss there. At the same time, by the way, that loss occurred, as you said, the CCI 30 index was down 19 and a bit percent. If you took Bitcoin out of it, it was probably down more like 25 or 30%. So doesn't make it better, but it is interesting that it's in a downside vol market that it's occurred, and gives us that impetus to invest in these funds we've been focusing on for some period of time. So we'll get the report out, or the report will be out tomorrow morning, on both our view of the marketplace in the rear vision mirror to a point, and a little bit going forward. And then at the end of December, so early January, we'll get a report out for our view on the year, what's happened in the rear vision mirror, and what we think will be moving forward in the year of 2026 and 2027, as much as one can predict in this marketplace. Any further information or thoughts from you, Greg?
No, I just wanted to wish everyone a Merry Christmas and a Happy New Year, and stay safe during the festive.
Yeah, exactly. And same from me. I do look forward to seeing you all next year. As you know, we're very available to be able to pick up the phone and call. We'd welcome your call. We'd welcome catching up with you. Have a wonderful Christmas period of time and also have a wonderful holiday, hopefully with family or friends. Bye for now.
Cheers.